Hey everybody, Smart Silver Stacker here, and we are living in interesting times. And I'd like to discuss the gold silver ratio and what that could be telling us and what that could mean for the future. This is a chart of the gold silver ratio, and basically that number is just at any given time the price of gold divided by the price of silver. And it basically just tells you how many ounces of silver you could purchase for 1 ounce of gold. And historically, this number has fluctuated. It's typically stayed in a range of at least somewhere between 20 and 100. This chart goes all the way back to 1970, and that's a good time to start the chart because that is when we, roughly around the time that we embarked on our current monetary system, where we removed the dollar being pegged to gold. So the end of the gold standard is a good time to start this chart. It's relevant information for our current situation. And if you can see, the ratio of gold to silver has gone up and down. It spiked a few times. The highest it had ever gone until now was 100 in 1991. But at the moment, you can see the all-time high here is 118. And that is pretty close to what we're at right now. It says current ratio 118, but I think that's just because this is such a long-term chart. Right now, as I'm making this video, the ratio is closer to 112, but still extraordinarily high, higher than it's ever been before at any point in history. Going above 100 is significant, but we got all the way up to 118, and right now at 112, very, very high gold-silver ratio. And of course, excuse me. Of course, that ratio could go higher. I mean, anything can happen. This would basically mean the price of silver falling further is the prime catalyst that would increase the gold-silver ratio. As in bear markets, typically silver falls faster than gold percentage-wise. So that is why in bear markets for the metals, this number rises. But so let's go take a look at another chart. This is the price of silver plotted with the price of gold. And then the blue line down at the bottom is the gold-silver ratio. So something you can notice is that every time this ratio peaks, and this chart goes back to 1998, so this is going to be a look at basically the last 20 years, 22 years. You can see that every time the blue line reaches a peak, it tends to be the beginning of a bull market in the metals. That is, as it gets above 70 to 80, that's kind of the high end for the ratio historically. That tends to be a signal that a bull market is coming. You can see that happen back here in, let's see, this peak here in May of 03. And that peak would have been at, let's see, May 03, February 03, around 82. So the gold-silver ratio peaked at about 82 right here on the chart, and then we got a pretty good run-up in the metals up until 2008 when the market tanked, of course, and metals sold off along with stocks. But then the ratio peaked again in October of 2008, which is when the metals reached their low for that drop from the financial crisis that we had back then. And that, of course, issued in an enormous run-up to 2011 when silver spiked up to $50 an ounce or close to it, and gold was over 1900. And you can see the ratio bottoming out there. Let's see, what did that bottom out at in 2008? The ratio got as low as 38. So pretty significant drop from its peak of 80 in December of 2008. But we see another peak here on the chart, and that is from 2016. If you remember, in 2016 we had a pretty sharp drop in the metals in a very short period of time, and that was the end of the fall from 2011. Got a little rally there, pretty significant rally actually in 2016, and ever since then the metals have sort of drifted lower, slowly getting kind of beat up. Had a little bit of a rally at the end of 2019, and then of course the current pandemic-inspired crash in the price of the metals occurred. So we are seeing a spike up to 118. Now, typically that would be a signal that a bull market in the metals is coming, and I think that makes a lot of sense. If you watch the video I put out yesterday, we can see the beginning of the decoupling in the price of physical silver from the spot price. And there are shortages in physical silver, and also that coincides with all of this talk of bailouts for every citizen and numerous businesses from the government, massive intervention from the Federal Reserve in the bond market. They're coming out and saying they'll basically buy any asset to keep it up. So, they might even end up buying stocks. They're going to release a lot of money into the system with all of these bailouts and all of this propping up of the economy. So it would make sense that we would be in for some significant inflation in the near future, which would bode well for the price of precious metals, typically viewed as a hedge against inflation. That combined with the record high gold silver ratio, I think is a pretty clear signal that we're in for a rise in the price of metals, both gold and silver. But during a bull market, we know that silver tends to perform significantly better than gold on a percentage basis, just as during a bear market it tends to fall more. It's just a smaller market, it's more volatile, so it gets driven up in price faster than gold, which is an enormous and very liquid market. But anyway, that's just my thoughts for this chart and what's going on in the metal space at the moment. I mean, could the metals fall further? Yeah, absolutely. And if the markets continue to sell off like they have been, we had a big rally today, but if they take another dip down and they go a lot lower, we'll probably see people liquidating precious metals to meet margin calls and that sort of thing. But a lot of that will probably be on the futures market, the paper market. So I wouldn't be surprised if, even if we do see that drop, and the gold silver ratio spike even higher, that will probably just be a trigger for even more physical metal being gobbled up and purchased. And so we probably won't see too much of a fall in the price of bullion. We might just see the spot price drop and then the premiums on bullion explode even higher. And then I would expect after that, if all of these bailouts and everything do occur, and if this market tanks even further, I'm sure the Fed will come out with yet more stimulus and yet more promises of just pumping money into the system. So it's hard to see a situation in which that gets reined in at this point, with the attitudes among most people regarding that. It seems like people are almost universally in favor of all of these bailouts, and they may be the right move at this point, but nonetheless, I think that it is going to be a major stimulus, not only to perhaps the economy, but also to the price of the precious metals. So, keep stacking. I know the wait times are long, but if you can get your hands on some metal, now would probably be a good time. Might be the last opportunity you have to get some physical metal, at least for the time being. And I hope everybody out there is staying safe and has some metal to be prepared for, a large wave of inflation. Maybe that won't happen. Of course, this isn't financial advice at all. This is just my musings on the subject. But thanks for watching, everybody. If you have some thoughts on that, or you have some ideas about what the gold silver ratio might be doing, or where it might be headed in the future, let me know in the comments below. Thanks again.